that driver point we were talking about before. The traffic there must be huge.
Oh yeah, corner site.
And in fact, National Tiles, we actually divested a number of properties for Frank Walker, and that business is incredible. I would bank them any day of the week.
Absolutely.
They are just such a great offering. Welcome to the Burgess Rawson podcast. Today it's all about LFR, large format retail. Welcome Zomart He, Matt Wright and Geoff Sinclair.
Thank you, Ingrid. Good to be here.
Good morning.
Zomart He, you're our head of Asian services. Matthew, our state partner in our Victorian team, and Geoff, a director in our New South Wales team. So we have a large portion of the eastern seaboard here. Matthew, I'm going to start with you. What is large format? Before we even start talking in depth about these tenants and these properties, let's start with the definition. What does it include and what is it?
Yeah, well, it's our larger, obviously, retailers that typically have a larger footprint than our smaller, old, generic retail stores. Personally, I love it. I think it's terrific. It's growing, it's different, it's always evolving. Interestingly, it takes up 27% of our total retail sales in Australia, which is, when you analyse that, it's just huge, given the supermarkets. So
is it defined by the size of the shop? Is it defined by that, or is it defined by the type of tenant? How do we define it?
Yeah, both. I think historically we used to call it bulky goods, which was the larger sort of product, and I think that has changed. So now it's probably more about the bulky goods that have evolved into smaller retail but larger footprint. So I'd probably define it more so as a mixture of both, but larger footprint and the bulky goods that have now evolved over time.
And a list of some of the tenants that we're talking about. I mean, traditionally we talked about Good Guys, Harvey Norman, IKEA, but now we tend to also include things like Pets Domain, Pet Barn, Chemist Warehouse.
Absolutely.
You know, what other tenants are we now including in that definition of large format?
We've obviously got the super retail guys. So you've got the more camping and fishing, BCF. We've got Anaconda. We've got the typical furniture guys and the Nick Scalies. But I think we're also seeing a shift towards lifestyle and probably traffic drivers in some of the large format centres. So we're seeing more gyms. They can be deemed now as, and Geoff, I mean, coming from the international, which we'll touch on a little bit later, but you've got the American guys coming in at a larger format. So it's evolving. The reject shop, these types of people are in these large format sort of centres and can be considered that too.
And talking about the reject shop, there's some very exciting news that came out last week that Dollarama is looking at taking over the reject shop and looking at expanding the store network. As Aussies, we've never shopped at Dollarama, but Geoff, we have an expert in the room. Who is Dollarama and what do they do and why do they want reject shop?
Yeah, first of all, everyone's been to Dollarama. It's a household
Not us.
It's a household name. On the other side.
Yes, I did. Oh, you have?
Yes, I have.
Oh, right.
If you visit, you've probably been there. So they've issued a takeover bid about 259 mil to take over the reject shop. Similar offering, discount goods, kind of lower scale, kind of sub $10 million items, but large format, bulky goods space. They're volume business. And I think Reject Shop has about 390 stores in Australia. I think with this bid, it's going to help them grow to about 700 plus. So we'll probably see more of that in the years to come.
So my big question, and obviously it's crystal ball stuff, but Reject Shop today, obviously it's a huge win for shareholders if it occurs. But what is it for landlords? Is there a yield differential, Zomart, do you think, in a Dollarama as your tenant as distinct from a reject shop? Is the value of our landlord's property suddenly changed all of a sudden?
So traditionally, so what we can say, so the bigger the group, the bigger the tenant, the sharper the yield. So if you pull, say for example, the Bunnings, compare with BCF, so Bunnings are publicly, so listed company from Wesfarmers. If you compare that with BCF and some other small retailers, for sure, so the yield difference is, so that could be anywhere between 50 basis points to 100 basis points.
So landlords who have a reject shop should be really looking at their lease and seeing what the future holds for them. You've just mentioned my favourite retailer, Zomart, Bunnings. I absolutely love them.
Yep.
Part of the Wesfarmers Group, $82.1 billion. And very excitingly, in our next portfolio, we have over $100 million worth of large format coming to market, which does include a Bunnings.
Nice.
So tell me about it, Zomart. What are we doing with Bunnings Plainland?
So Bunnings Plainland was built in 2021. The future depreciation benefits could be huge. And
I believe it's 52% of the first year's rent indicatively.
It's perfect. Yep.
Sounds pretty spot on, doesn't it?
Doesn't it?
Very good.
Yes. So Bunnings always is on a large parcel of land, and so it's in a very high growth area of your planet.
But just on the high growth though, like because we sold it once before, going back a few years ago, and since that time the growth is just astronomical.
Huge,
like we've got Woolworths, Macca's,
and
the new schools going in as well.
Yeah.
A new prison as well.
Yeah.
There's an $855 million prison creating some 700 jobs at the moment, but will create 800 permanent jobs to the region.
Yep.
And I think the population's forecast to grow to over 55,000 by 2041. So it's a booming area of Queensland overall. Going back to our portfolio, what I find interesting about large format is that there's a price for everyone. So, looking back at some of our past sales, we've sold large format for as little as 650 odd thousand and as much as, 50 million. Matt, I want to talk to you about the kinds of property. If I'm in that mid-range, if I'm staying under 5 million, what has this next portfolio got for me and what would you be buying?
Yeah, and that's one of the reasons we love large format, because of the diverse buyer types that we can offer it to. And I think it's, a really, really quality offering. It's simplistic in terms of typically it's one tenant. Most of them like the same sort of footprint between that sort of 600 to 1,000 plus. So, but what we've got is another growth area, which is in Victoria, which is Portland. I know you've been down there once or twice before fishing, which is great. So it's obviously a major port, hence the name. But two brand new assets coming to market, which is leased by Vinnie's. We all know Vinnie's. And then Pets Domain, which is a terrific story, and we might touch on those guys. But they're, the pet market's just growing and growing and growing, and we see it all the time. But Pets Domain are probably that next up-and-coming sort of retailer. Historically, they're actually a manufacturer of pet products, and they've gone into the retailing side now too. So they're sitting on about 60 stores, so a quality lease covenant. But the thing I like about them is the DD they do on the area. So, we've got our major guys like Pet Barn and Pet Stock that have sort of more aggressive growth strategy over the years, and they've flooded the market. But Pets Domain pick like a little niche that they just love and they know they can retail out of. So we did one in Mount Isa, which was really interesting. There was no dog wash, but there was over 5,000 registered dogs in the area. So they picked the niche. But this is another one of those suburbs that I think they've gone, hey, we can really trade well at it here. So that's probably between 1.6 plus sort of price range, so really affordable. We're going to auction those individually. So I think that's a really good one. And being brand new, depreciation benefits as well.
Yep.
And going to the other end of the market, Geoff, you're bringing Warners Bay to market, which is an incredible property with such a mix of tenants. When we talk about large format, it's got everything and a fast food pad site, which is one of its really, really unique offerings. Tell me about the tenants in that and tell me why that property is so unique.
Yeah, perfect. Warner Bay is an incredible asset.
Where is Warner Bay?
Yeah, Warners Bay. It's about 20k from Newcastle CBD. Newcastle's about 2 hours from Sydney. Sydney's second city, really. Sydney, Newcastle, Wollongong, major cities in New South Wales. Warners Bay sits on over a hectare of land. You've got 5 retail tenants. National Tiles, Salvos is there. There's also a freestanding Hungry Jack's.
That's rare.
Which is rare. Which is why we like LFR, because the sites can be very versatile. Everyone wants value add. You look at an LFR center and there's some excess land. What this owner has done is he crafted the excess land into a freestanding Hungry Jack's. So it allows you to buy an LFR center with a freestanding Hungry Jack's. The Hungry Jack's rent is below rent as well. The LFR rent on the center as well is low 200s. When you look at nationally, that is below market. I think the average rent in Sydney for LFR is pushing about 600.
Wow.
So it's quite attractive from a kind of rental increase standpoint. Again, household names, right? Household name tenants. There's a Anytime Fitness on site as well.
That was back to that driver point we were talking about before. The traffic there must be huge.
Oh yeah, corner site.
And in fact, National Tiles, we actually divested a number of properties for Frank Walker, and that business is incredible. I would bank them any day of the week.
Absolutely.
They are just such a great offering and have such a connection to their client base and their community. They absolutely do tiles very, very well.
That's exactly it, because investors are consumers of these products as well, right?
Yep.
They understand them and they see what they can do to the particular offering long term, right? I've sold LFR before, and sometimes it's had a small tenancy beside it as well. Maybe it's not a national tenant. Maybe you have a BCF and a non-national beside it. And what's happened in the years later is that smaller tenants actually moved out and the BCF moved in. So it protects their expansion as well, because those sites, they usually have a neighbor, and if they want to expand, there's usually an offering that may come up in the future as a result of obviously landlord works and whatnot. So there's good upside as well, which is why we like them.
And when you talk about those square metre rents, I mean, what I'm hearing is a much higher rent in Sydney than, for example, in Victoria. As our Victorian expert, Matthew, how do you see that as a buying opportunity? Because I think, you know, most of our large format rents are sitting in the high 200s, mid to high 200s.
Yeah.
You know, from what I'm seeing is you're getting the same tenant, just obviously different location. And we talked before about industry over location. What sort of buying opportunity does that give to buyers in Victoria when you've got those slightly lower rents than Sydney?
Yeah, and I think it's been a shift over the last sort of 12 months because there's been a lack of new developments in the large format space coming to market because construction costs have been so high. So retailers have sort of shifted a bit, and I think we've got that disconnect between the historic rents, which are low, and then you've got these new rents. So arguably we're going to see some rental growth from these older sites as we get to market reviews and increases go up. So as a buying opportunity, I think we'll hopefully get some yield compression. So buying today, you'd forecast potentially with inflation and all the stuff happening around the world at the moment, we're going to get some yield compression, but also rental uplift, which means capital growth for our potential purchases in due course. So this is a really strong opportunity, I think.
And hopefully some interest rate cuts according to the experts, which we're not experts on interest rates, but certainly according to the experts, interest rate cuts are coming as well. I was listening to something this morning whereby the volatility rate is at 45, which is one of the all-time highs in relation to shares and stocks. And so I know my clients have been ringing me about the safety and the security of property. Is that the sort of feedback you're getting as well, Zomart, within your space?
Yeah, 100%. Like, so just as of yesterday, like, I had a very lengthy phone call with one of my key clients. Like, so at the moment, she's looking to buy a shopping center, so anywhere between 30 to 50 mil. And so what she's getting basically, so for our clients, like, they are not only talking to us, they are also talking to bankers and other financial advisors. So at least, so the conversation I had with my client, so her banker is telling her to buy something.
Yeah.
So which really, so I also had another conversation with another shopping center client, and so he's our, so we've been managing, so his shopping center for the last 6 or 7 years. His banker is also telling him, like, take your money from the stock market, put into real estate. So that's basically, so that's the conversation I had with 2 of my clients.
So Matt,
Yes.
you mentioned that we've got Vinnie's in Portland, and Geoff, you've got Salvos as part of the Warners Bay development. Are they even large format? Who are Vinnie's and Salvos, and why are people so attracted to them as tenants?
Yeah, and I think Geoff touched on it before in terms of that trusted brand, but it's probably more than that, isn't it? Like in terms of the structure of it. They're government funded, which is a key component to paying the rent, which is critical. Low cost of stock, but also staffing costs are down. So the affordability to pay rent is one of the key drivers, and they, that's all encompassing with these tenants. So that's my view.
And expanding their store network at the moment, aren't they? Salvos is very active.
That's exactly it. And if you look at every key regional location you've ever gone to, these brands are there, right? They're not just in metro locations; they're in regional locations where obviously investors are looking for as well, because we do a lot in the regions, and what we're finding is LFR is kind of pretty stable across metro and regional in terms of interest levels, which is quite good. And what it does is it allows investors to buy a branded name at a sometimes in regional locations at a more attractive yield, right? Which we think is quite attractive.
Now, within the large format space, we have everything from tenanted existing investments through to also development sites. And we have 2 development sites coming to the market, which are potential future LFRA sites. Zomart, tell me about Osborne Park.
Yep.
Where is it? What is it? And why do I want it?
Yeah, for Osborne Park, so I think also the common thing for those 2 development sites, so is they are extremely rare. So for Osborne Park, so that's the largest large format retail site coming to the market in decades. The land size
How big is it?
24,000 square meters, so over 24,000. And also the location is just fantastic. It's only 500 meters from Mitchell Highway, so which is one of the major arterials in Perth. And also so next to it, it's Centuria's large format retail center, anchored by the Good Guys. And also you have pretty much everything there, all the major brands, IKEA, Bunnings. You have some major car dealerships like Ferrari, Porsche, and everything else. Everything is on that street. So it's just unbelievable, all that site is coming to the market, and you can potentially put whatever you want on that site. So is it vacant? So no, it's not vacant. So the property at the moment, so it has 8,800 square meters of warehouse. So you can either do like a new build and then knock down the whole building, or you can utilize the existing building.
So big value add proposition.
100%.
And is there going concern? Is there any income for a potential purchaser?
Yes. So at the moment, so the property is being leased to 13 to 40 tenants. So with the holding income of roughly 1.3 mil. The longest lease is to 2027. So it's perfect ideal scenario for developers. You can hold it, do your town planning application and everything for 1 or 2 years with holding income, and also you can buy the property as a going concern rather than pay the 10% GST on top of it.
Sounds incredible.
Western Australia, just for that point, we're seeing a lot of growth in this large format space. Per capita, they spend the most money. And development-wise, they've actually got the most amount of new developments for large format coming out of the ground. So there's 16 new centres planned by 2026. So combine that, and I think it's a wonderful opportunity.
Yep.
Whilst you've got some holding income to get the right tenant mix, and then go for it. I think it's fantastic.
100%. So for Torquay, so that development set in Torquay is also similar proposition as Osborne Park. For the Torquay property, the total land size is 2,800. It's such a rare, large land coming to the market because so the location is right between Coast and Woolies. Passtock real estate agency and also a medical center is on the side, so they are paying a short holding income. So it's perfect development opportunity for anybody who wants to do a mixed use or commercial one development site.
Well, I mean, I hear 2,800 and I can immediately think fast food,
Yep.
multiple fast food potentially. I mean, fast food these days can fit on as little as 1,000 and obviously optimally, 2,000.
Yep.
So it just sounds to me like incredible opportunity.
Yep.
And where in Torquay is it?
So it's right between Coast and the Woolies. So it's on the main strip.
We call this like the old part of Torquay because
Yes.
it's grown that much. They've got this new booming area, and this is the last sort of internal land holding between these key retail precinct.
And the population of Torquay has been changing incredibly. It's grown substantially over the last few years, and then it booms again
surge.
during tourist
So
time.
which is actually, so I think the Torquay's housing price is perfect reflection of that boom, basically. So if you go back to 2019, the median house price in Torquay was only 800, and at the moment it's just a touch under 1.2 mil. So that's
Wow.
So that's only in the last 6 years.
Do you think the highest and best use for that site is to develop another LFR center, or what's the angle? Do you think?
No, I think so it could be a potential mixed use development. So you can put shops basically for
Yeah.
the ground level, and because the zoning allows you to go up to 3 levels,
Yeah.
so you can put apartments on the top as well.
Accommodation's a
it's huge.
huge piece down there.
Yeah.
And we've talked about WA and opportunities outside of the core eastern seaboard, where we are all from. Geoff, what about Fyshwick? We obviously have an incredible asset coming to market in Fyshwick, which is obviously in Canberra, my hometown.
Really?
Tell me about
didn't know that.
Fyshwick.
Yeah. Loves
I
fireworks.
mean, I know what Fyshwick. I know what Fyshwick used to be famous for. Now it's famous for large format,
Fireworks.
but it
Fireworks.
used to be fireworks. But now it's actually an incredibly bustling and booming area of Canberra. I would say it is the best large format area of all of Canberra.
I would agree. Fyshwick, Canberra, ACT. What's that? 2.5 hours to Sydney. It's got 5,000 square meters of retail. It's got a really strong history of occupancy. Anchor tenants. This is also another thing about LFR. The anchor tenant is Chemist Warehouse.
Wow.
So you've got Chemist Warehouse in an LFR site, and they're not going anywhere. They've been there for so long. But let's say Chemist Warehouse wasn't there. They've got the main tenancy. That could be a BCF. That could be a Rebel.
Yeah.
That could be an Anaconda. That's the beauty of LFR, is the versatility. You've also got 10 Tops. We talk about discount retailer as well. 10 Tops are
Got a
there
huge
as well.
growth.
Now, as a Victorian now, core Victorian, what is 10 Tops?
10 Tops is a discount retailer, large format retail, bulky goods.
Yeah.
I think they originally had their first store was Discount Dave's, I think is where they started. You still see a few Discount Dave's
Yeah, right.
around New South Wales, and then it formed into 10 Tops. Their model, as you go on the website, is everything is below $10,
Yeah.
which is their angle. So again, they're very regional locations, but also metro locations, super convenient, large format,
And are they
highly
growing their
diversified
store
bars.
network? What's their approach?
They're growing as well. They do have a good network of stores. across the country nationally. I think they are.
They're in huge growth mode. We're looking at a lot of sites from a leasing point of view regionally where they can get in and trade really, really well regionally. So I think we've got 6 or 7 locations that we're talking to them about in Victoria. So New South Wales based, but now expanding.
Exactly. Yeah, they're coming up. And this Fishwick site also has an Auto One as well. So Tire and Auto One, similar to Super Cheap Retail. They sell automotive goods, large format retail, roller door access, plenty of parking, good branding. The site's laid out extremely well. It's kind of like a U-shaped LFR site with all the parking in the middle, and all around you is major brands, fast food, auto dealerships, close to Canberra CBD. So it should be exciting.
It's a great mix, isn't it?
Yeah,
and spread of risk too. If one tenant left, your replacement's pretty easy.
Exactly. And what we're seeing as well on new leases with LFR, and you've probably seen it as well from the leasing side, we used to see 5-7 year initial lease terms being offered to developers, right? Now we're seeing 8, 10, maybe even 12-year terms being offered, which is quite attractive. Where BCF used to have a fixed lease. It was CPI, cap and collar, 1 and 3. We'll do 7 years. That's it. Take or leave. But now there's more competition, more retailers, and we're seeing better leases on offer, which is quite attractive as well.
And that's really interesting when you compare it to a supermarket lease, for example, where the supermarkets have been shortening their leases over time. So the large format tenants offer a quality tenant but a longer lease.
Yep.
And when you're comparing that against something like a supermarket or against that more traditional shopping centre retail, how are your clients viewing that? Are they viewing them like for like? Are they applying similar yields, Matt? What are you seeing?
I think they are. I think you're right. Supermarket leases are quite complex and complicated, and they're quite...
And getting shorter.
They are. And we're getting longer, you're right. And I think these guys want to grow. Large format guys want to grow their network. So they need to be adaptable in their lease term, provide better covenants, and we're seeing that. So from a yield perspective, I'm seeing a little bit of compression, certainly in certain price points, which tells me it's far more attractive for buyers at the moment. People want this type of product.
And you mentioned Chemist Warehouse. Have we seen any Chemist Warehouse come to market post the Sigma deal, and has that changed yields?
We're certainly talking to a fair number of them, and it has to change yields. And I think also the competitive nature of Chemist Warehouse. Like, are they now looking to own property too? So are we going to get competition from that? So
they own a lot of stores.
I think it will. We will see yield compression, and there's been a couple of strip locations that have come up, and we've seen some amazing results with them. I think we're going to see yield compression.
Well, they're a great tenant, and in my experience from a management point of view, often as well, they're always looking to grow. So quite often we've had a Chemist Warehouse and they've taken the shop next door and the shop next door and the shop next door, and they will continue to grow. So their footprint overall has got much bigger as well as compared to a traditional pharmacy.
Yeah, and they've changed their model too, like the Chemist Warehouse, and then they went into optometrists. So they now got the eyes part, and I'm assuming next will be the ears, and that's where the growth will come. Like they'll just keep going.
We just need the pets next.
We do need that.
Veterinarian.
The dog wash.
Yeah.
And we know that pets must be a booming industry because a couple of years ago, Bunnings moved very, very strongly into pets as well. They've got a whole pet aisle now, which says to you, that it's a booming area. Talking about yields and how it's perceived, we've got a pet barn and a pet domain. Matt, can you tell me the difference between those two?
Yeah, I think it's, we sort of touched on it briefly earlier. You had the historic ones, the first to market, basically Pet Barn and Pet Stock, that did this rapid growth. So I think Pet Barn's 200 stores nationally, part of Green Cross Group, so they're Australia's biggest pet care provider. They also have vets, some other add-ons that we'll get into. And then you've got Pet Stock sitting at 279 outlets nationally, and Woolworths obviously acquired them in the last sort of 2 years or thereabouts. And then we've got Pets Domain under that, which is the Tasmanian-based guys, and they're sitting about 60 stores. So generally, being Green Cross and Woolworths, your yields are probably stronger, being an ASX-listed tenant. But Pets Domain doing the same thing, and they're getting some yield compression on that too. So I think out of the industry, I think we're sitting at about $14 billion in turnover for pet products.
And to jump a little bit, last auction, Geoff, you sold G-Bung which was a PFD Foods, which is now owned by Woolworths. I suppose my question is the Woolworths ownership component that you mentioned a key driver in yield? Does that move that brand slightly up? Or are investors actually loving the homegrown, in control of costs Tasmanian story where they're still in control of everything they do? What do you see as a conversation? Because I know you sold the PFD. How did the ownership of Woolworths play into the interest in that property?
Definitely. I mean, talking to investors about the PFD covenant, you instantly get to turn to Woolworths as obviously who actually supports that covenant. People love the Woolworths brand. Again, everyone knows Woolworths. Everyone knows PFD as well. So you've got two obviously well-known brands, and then PFD is now owned by Woolworths. So it's a strong covenant that really supports it as well.
And we bought PFDs to market a few years ago, which were then at that point half owned by Woolworths. That's now 100% owned by
Yes.
Woolworths. And I know that you also saw the one in Devonport, Zomart. How did you see the change in investor approach with the whole owned Woolworths as distinct from a partially owned?
Yeah, because I remember like so when we so when we did the first PFD portfolio 2 years ago, when we talked to investors, so some of the questions it come from the investors so how come Woolworths only bought 50% of them, and now so especially for Geoff, so because the top three bidders are Asian investors basically, so when I speak to them and when I did the inspection with them, so that just gives them confidence, so that no, that's fully 100% owned by Woolworths as a publicly listed company. Plus, so the building extension, plus so how much money the tenant and also the current or the previous owner, Charter Hall, spent on the building is just substantial. So that's why so they love the location, they love the tenancy, plus so they love the lease covenant.
So coming back to the pets then, Matthew, I'll ask the same question. Green Cross, Woolworths or privately owned, what is the yield differential between those three offerings?
Yeah, it's a great question. I'd like to put a blanket over it. It's probably 50 basis points to 100 basis points, depending on location. I think regionally, that's an outlier. Metropolitan, you could argue
You mean
a little bit.
Pet Bar and two, you're saying Pet Bar and two
Pets domain,
That's
but
right,
at the same time,
Pet stock.
yeah, and something we do really, really well is get to the bottom of the tenant. Who are they? And tell that story. Yeah. So I'd like to think, and putting my Tasmanian hat on, that there's not too much of a gap if you can get to the bottom of the tenant and tell that story. But overarchingly, I think Woolworths lease covenant, every investor wants that.
Pet Barn's actually linked to the NASDAQ as well.
Yeah.
Because Green Cross is owned by TPG, which is obviously traded on the NASDAQ. So we like Matt said, we go into it and we bring it back to the source as well. And those tenants are strongly supported.
So maybe a good comparison would be the 7-Eleven, because so 7-Eleven they used to be an Australian family business, and now so the business being acquired by the Japanese high company. So I remember so when the acquisition actually happened, I start calling all the 7-Eleven deals we did in the past and just say, hey, congratulations, now your tenant becomes much stronger. So there's a positive sentiment, so when we sell a 7-Eleven now, because it's much bigger and stronger tenant. So I guess it's very hard to quantify, the yield difference, but clearly, so we can sense, there's definitely positive sentiment. So when we talk about the tenants and everything else.
It's a good thing to look at as well, even if you're not buying a tenant that's linked to an ASX listed company. If you look at how big their network is, right? We obviously don't always know what's happening to the parent company, who's looking at acquiring it. But if you look at a brand, an LFR brand that does have a network of 30, 40, maybe 50 stores, there might be an exit strategy that they have in mind, whether that's private equity or selling to a big brand name. And then instantly, like someone said, you could have smaller, what was originally a mom and dad operator, turn to national, turn to ASX in a matter of a couple of years.
Yeah.
And so obviously investment in Australia with your clients is absolutely number one on their focus. And what we're obviously seeing is this incredible investment. For Dollarama to want to come here, the investment by Viva into OTR, for example, it seems to me like more of these massive companies, and we're talking, their capital value is worth more than most of the big Australian companies on the Australian Stock Exchange. What is that drive of overseas investment into Australia? Why? What are your clients telling you about their attraction to Australia?
Yeah, I think also there are two parts. So the first part is so as the institutional investors, say for example JD, a big multi-billion year company. So they are buying industrial warehouse in Sydney, in Melbourne, in other areas. So I think what they are seeing is because I'm not sure if we can talk about maybe the trade war and everything else. So so the Chinese company, they're looking to diversify their risks and everything else and just sell their goods to the broader market. So that's one part. And for the second part are the private investors. So that's the buyers or the clients like we deal with on daily basis, what they are looking for so number one for Australia is such stable country in terms of finance, so politics and everything else.
And like laws and
laws and everything else
don't change that much. Very stringent. High quality laws also around property maintenance and the requirements of the property as well. So I think that's also attractive. But I just think it's very interesting the way we're seeing such new entrants invest large amounts of money in what in the scheme of the world is not the very big country.
No, that's exactly right.
So there's the thing basically. So we think the Asian community, so if you want to make money, then go to the Asian countries. But if you want to create wealth or generational wealth, you come to Australia.
There you go.
Wow,
Very good.
Fantastic. And Geoff, coming back round, what property? Okay, we've done this in the last few podcasts.
Oh, here we go.
I'm going to give you $5 million.
Okay.
What are you going to do with it, and what are you going to buy?
It's funny you asked this. I was talking to one of my colleagues actually about this as well, who sells a lot of childcare assets. A couple of days ago, so I'd said 5 or 6 mil. If you had 5 or 6 mil, what would you buy? And I'm not making this up because of the podcast today, but I went straight to LFR. I really did. So I thought, okay, I actually brought this property to market in Warrawong, and it was an LFR asset, right? And it didn't end up selling, but we got to 4.72%. Different story. What I liked about it was so versatile. It was a freehold. It was about a 650 square meter box, and it was leased to OMF, Regional Mattress Factory.
Mattress,
right?
yeah.
So I'm not saying this is the one I would buy, but what I liked about it is the rent was well under market, and they were coming up to a market review. So there's upside in that off the fact that they've been there for 12 years. So I'd probably look for an LFR site, main road frontage, good parking, leased to a national brand that's been there for quite some time, that's on historical rent. And I didn't know if you wanted a detailed answer like that. Sounds like I'm searching for a
Sounds
while.
good.
Sounds like
Very
I'm
good
searching for a while. However, I think the sector's got a lot of growth ahead of it, and that's probably what I'd be looking for.
Yeah.
So Matt, I'm giving you $5 million. What are you doing with it?
Well, I was second. So conditional contract. I'm going to take your 5, Ingrid's 5, your 5. And my 5.
That's 20
I'm
million.
going to buy Bunnings Plainland because that to me is the pinnacle of large format.
Yep.
I love large format. That's what I would be buying anyway. But all the fundamentals of Plainland, you can't get much better, can you?
No.
Yeah.
So I'm buying Plainland.
Yeah.
And we were just talking before with Jamie Allen, Director of
Yep.
Investments at Kinglake Group.
Yep.
And he was specifically talking about the incredible growth story of Queensland. And they are putting a lot of their focus and a lot of their investment into Queensland. House price growth, population Olympics, migration, good quality, lower stamp duties, lower land taxes.
Infrastructures, is it going?
The infrastructure is incredible. That Bunnings Plainland, the highway that goes straight past it, 25,000 cars a day are going past it. It's just incredible. So
Amazing.
I reckon I'm putting my money with you, but Zomart,
We can go halves and then we've still got a little bit of time.
Zomart, what are you buying with $5 million coming to market?
What I will do is, so probably I will just use $3 million buy a small large format retail shop, like maybe a pet domain or pet barn or something else, and I would use $2 million to buy a fully established childcare center.
Yep,
Yeah,
a
in
good
Queensland
mix.
somewhere. Yep.
Good mix, sharing around the money and diversifying.
Yes.
What would you buy other than Plainland? Or you're just staying with Plainland?
I'm loving Plainland. I do also really like Warners Bay.
Yeah.
And the reason is the pad site to Hungry Jack's.
Yeah.
I mean, what we've seen, even with interest rate movements, is that fast food has stayed stable. And it's basically 4% or sharper.
Yeah.
And then when you overlay that, I mean, the stuff that we already did in Warrawong, the yields of fast food in that whole region are probably even sharper than 4%. So I think if I'm buying that thing, in the fives, I'm getting a bargain on my Hungries.
Yeah.
And I'm getting some of the best tenants. Like I said, we met Frank Walker a couple of years ago and we divested his properties for him, and I'm backing National Tiles from my point of view. So Plainland and Warners Bay would be...
And you've got Macca's.
I'll bid on both, but you might
Okay.
get Bunnings out
I'll
and
get
release
outbidden
me.
by the CEO. I'm out. That's why I said halves.
It's always easy when you have something that you're really like. You're not trying to sell it to someone, but you're encouraging them, like, there is actually upside in this asset, right? And that's
But
what,
also, they're
that's what's
great
great.
assets. Like, I look at this list and I sit there and go, I love this stuff. Like, I'm happy with any one of these, $100-odd million worth of LFR. Sorry, I'm happy with all of them.
And you know what? It's an education piece as well, because we get a tenancy schedule. We look at rents, and if it's below market, we get excited, which is great. However, some investors aren't generally necessarily privy to what market rents are, and that's obviously what we do. We educate all of our buyers and clients about where rents could sit and where they should sit, and equivalent that to obviously upside in the actual property as well.
The other thing for me about large format is generally the outgoings are a lot less because you have less common areas, you have less toilets to clean, etc. So that's the way that I always see a rent is a tenant can pay, a cup full, and if outgoings are taking up half the cup, then there's only so much rent that they can pay.
Yep.
So there's two parts to that. One is obviously lower outgoings, larger areas, but also if you compare it to, for example, a traditional regional or sub-regional shopping centre, some of those rents are $1,000 to $2,000 a square metre.
Absolutely.
Which brings a level of risk to those retail tenants, and albeit they are anchored to, a high-performing supermarket. I personally tend to feel there's less risk in a large box like that. Also opportunity. There's so many tenants who'll take a similar size box. So, you can get 1,000 square metres. You could probably list 10 tenants who'll take 1,000 square metres.
Easily.
So your ability to relet in the event of something going wrong to a quality tenant is huge. And overall, the rents to me still seem cheap as compared to a regional shopping centre. But quite often, these are now destinational locations that people are going to on their Saturday morning, as distinct from the regional shopping centre. They're going to their large format centre. So they're competing for a footfall level without necessarily the same entry costs.
Yep. And from a personal point of view, it's a lot easier to shop there. You pull up at the front. There's no underground car park, travelator, kids running around. Like, it's very, very simple. And I think you've got to look at what HomeCo did with the old master sites.
Exactly.
I love shopping at those. They're simple, even though there's a Woolies, Chemist Warehouse. It's sort of that mix between large format and your traditional shopping centre.
And what we're also seeing, I mean, the Masters changeover, I think, was the big change to the way that everyone saw large format. Those Masters boxes being transformed, and we also saw things like play centres coming into them, and we saw
that lifestyle piece.
Harris Scarf and Spotlight, a group who took over Harris Scarf. So we saw a real change to the kind of offering in those centres, and they have become destinational.
Medical centres as well.
Yeah.
You see LFR centres with medical gyms as well, like highly diversified. And then, we always talk about pad sites as well. There's always those opportunities as well. And someone goes, if you go with family for the weekend, you need to go shopping. You've got kids. There's LFR. There's usually fast food not too far. Keeps everyone happy.
Yeah.
And a playground with the fast food,
that's right.
or a bounce centre.
And a doctor, just in case I get injured.
Or in case you eat too much fast food.
Yeah, exactly.
And also the centres now are normally also pet friendly, so you can walk your dog through them, which you can't do at a local Westfield. So they're changing and Bunnings was the one who really started that. They said, what does it matter that you let the dog in? And I think that there's a mind shift. So it's a different offering. I think it's more of a family offering. It seems more accessible. As you say, there's no travelators. They're generally on one level, easy to walk into, walk out of, always great parking.
You always got a spot.
Yeah, exactly. So, well, guys, thank you so much for joining me today. I've just absolutely loved your insights, and it's so wonderful to hear what's happening in the market. Hopefully we get some interest rate cuts to go with this portfolio. Absolutely. But I wish you all the best with the future properties.
Thanks for having us.
Thank you.
Thank you.
Thanks, Ingrid.